concise approach to top-down market strategies and the forces affecting investments. That's the spoken word on investing.
We're going to get the spoken word on the stock market now from our chief equity strategist, John Blank, who joins us via Skype from the West Coast, as he always does. John, the last Fed meeting provided what is probably, by this time, the most anticipated word change in Fed history, yet in all the anticipation and with everybody watching out for it, the market kind of shrugged it off. What gives?
Well, the market get back to its S&P 500 high at 2100, which is where it's a richly valued market to begin with. But what's going on here, Terry, is we have seen the light. The market's seen the light that past the word patience, there is a land where we're going to have a trial balloon. And what's going to happen here is they're going to be very cautious, put a 25 basis point rate hike out there. It really doesn't matter if it's going to be June or September. It's irrelevant. They're going to do one rate hike, and then they're going to sit back and see what this trial balloon achieves. And if it takes the stock market, they'll know that. If it takes it higher, they'll know that. If it goes nowhere, they'll know that, along with all the asset bubbles that are out there. But the main message I've gotten from why they're going to raise the rates is not because inflation is high, because it's not because they're worried about wage increases, because it isn't happening, but because they're worried about an asset bubble. They just think that they need to get moving now to sort of sniff this thing out and stop an asset bubble from happening.
That said, you're still looking for more upside to the stock market by year's end, right?
Absolutely. I mean, we're at 2100 here, late March. It was a quarter of the year through. We've basically come up about 50 or 75 base points this year. I expect we'll get to 2300 by the end of the year.
Since you and I talked about oil last, John, Saudi Arabia said that it would not unilaterally cut its oil prices. So against that backdrop, is the bottom in oil here?
Yeah, I think the main thing to think about here is not the fundamentals with the Saudis and North American production. That's the backdrop. I think the front burner really is the euro, because oil is denominated in dollars, and as the euro bounced off some short covering here, and we got a more expensive euro because it probably went too far. That's taking the oil price back up a bit. So with the euro, moving on the dollar moving the oil price, this little trifecta of activity is probably now putting a genuine bottom in for oil. And then behind that is the fundamentals that the Saudis are basically, not going to help it along any. So the financial metrics of oil matter short term, and then longer term is the Saudis.
So what are the global issues that are impacting our U.S. stock market, maybe other markets around the world?
Well, Terry, there's a few things to think about. One is, places like Australia and Canada are really suffering much more than you'd think because they're losing materials and oil revenue. Then you've got, the big hitters, China and India is actually rising and China is sinking, and they're both now at about 6.5% growth rates in that part of the world. And then we've always had another debate, which is Europe, and the truce with the Ukraine seems to be holding. The Greeks are still arguing, but they're at least in the euro, and the QE in Europe is taking interest rates down there to 1% or even negative rates in Germany. So this is all causing growth to come back into Europe, and that's changing the dynamic there and taking that risk off the table. And as long as the Greeks and the Russians find their way to some solution, we're fine there. And then the other issue is Brazil and Latin America. There's a recession going on down there, and it's kind of holding off all of activity there. And there's been a lot of worry and activity there about what's holding back those economies. And a lot of consumers down there are now moving to what's called dollarization, which is they're so afraid of their own currency that they're holding and buying everything in dollars now.
Let's talk sectors quickly, John. You're saying that information technology, very attractive here, huh?
Yeah, I think right now you've got to look to the cyclical, IT space, healthcare, and consumer discretionary in a cyclical fashion here. We're still going to get that 200 basis points, probably half of that coming from those three sectors. So yeah, I like the knowledge economy, I like the service economy, and I like these sectors that represent that. And we've talked a little bit about a pick that kind of demonstrates what I think is really working, and that's a company called Cirrus Logic, ticker CRUS, Terry. This is a 30-year-old company based in Austin, Texas, and 30 years is about the right length. They saw, in advance of all this, they saw the need to build better chips for smartphones and audio equipment, industrial applications for signals, things like this. So all of these improvements in what we're doing right now, Terry, the Skyping of audio, across the networks, it needs a chip. And these analog chips that are being combined with digital chips in what's called a mixed signal environment is really a great space for them, and they're making a ton of money.
Give me a couple of more picks real quick.
Another pick I like out there is American Woodmark, which is helping to remodel apartments and kitchens. I like that one a fair amount. And then if you go out further from there, you can choose any kind of healthcare pick that's going to help bring us forward. And any names that I would like, Centene is one that I like. Anything in the managed care environment is probably going to work.
All right, John, thanks for that. There you have it. The spoken word on the market and some sectors thrown in for good measure. With John Blank, I'm Terry Ruffalo. Hey, John.
Yeah.
Do you want me to?